This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Self-employed individuals will make a profit from their trade. We'll see later in the chapter that we're going to look at how that trade profit is produced according to accounting principles, but then needs to be adjusted for the tax rules. However, over the years, there have been issues regarding whether transactions that an individual is undertaking are in fact trading and treated as being taxed under income tax, or whether they are capital in nature. Therefore, they're not trading. Now, there is a reason behind this. Let me just explain the reason behind and why these things have caused issues over the years. So, if you had income and it was trading, for example, then you would have your income and you would have your expenses, which are allowable for tax purposes, and that would give you a profit. Okay, now taxed at 20 or maybe 40% high rate, basic rate, and they pay national insurance, class 2 and class 4 national insurance contributions. If, however, and it's a revenue decision to a large extent, it was treated as capital in nature, then you would still have the income, but the expenses, that would be classed as your proceeds. Okay, the expenses would be your costs, which is very different. And that would give you a gain or a profit. So the process by which you get to the profit is slightly different. Also, this could be taxed at, I'll wait for it, 10, 20, 18 or 28%. Yes, 4 different rates. There's no NIC. This is pensionable, and this is not. So over time, I can see which one you might prefer to have you to be taxed under. Initially, this one, because the tax levels are lower. There's no national insurance contributions. But which one do you think the revenue would want? I'm thinking this one. So over time, this, is it a gain? Is it a profit? Are we trading? Is it capital? Has gone on and on, backwards and forwards, arguing backwards and forwards. So you'd argue one with the revenue would argue back something else, and you'd start quoting law. Great difficulties. So over the years, we've now got what's known as the badges of trade. These tests distinguish a situation to determine whether or not it is trading or capital. Now, you'll be pleased to know in the exam you will never have to decide one or the other. You need to know what the tests are and to be able to apply those tests clearly to the scenario that's in the question. Okay, more rules to remember. Now, the way to remember these, it's a mnemonic, and it's called So Firm, and that will help you to remember. So if you read down, you'll see S, subject matter, S, O, F, I, R, M. So Firm. That's the way to try and remember them. So subject matter. We need to look at what it is that the person is selling or trading. As I said, you won't have to decide whether it's one or the other, just be subjective. So this is the rule. We need to look at the subject matter. Read the question. What is the subject matter in the question? Put it next to your answer. How long have they owned it? So the rule is length of ownership. Read the question. It will tell you how long, and then you can determine. It says where items are sold soon afterwards, likely to be treated as trade. However, if it's acquired unintentionally, i.e. you've inherited it and then sold it, it's unlikely that trade is taking place. It doesn't tell you black, white. These are the rules. Ownership is the rule. Read the question, apply that question, and give both sides of the argument. You don't have to decide, just give both sides of the argument. Frequency. Trade is normally much more frequent than gains. Normally gains is a one-off, maybe 2 items of the same nature, but it's rarely frequent. If you're in trade and you're only selling once every so often, you're not going to make any profit. So frequency of transactions, again, that's the rule. Read the question, check from the question what the information is telling you, apply it. Has there been any improvement? Okay, has there been any improvement? Has somebody bought something, then improved it in some way, done something to it to make it more marketable, or attempted to find, it says there, purchasers? That's much more likely to be a trade than it is to be a capital item. The reason for sale. Do they do it to make a profit, which is the second? Very much, these two are very much linked. And again, you won't have to decide. Okay, you won't have to decide. Just learn them. So firm. Okay.